Welcome everyone to a live Q&A event. My name's Kyle McCauley. I'm one of the national presenters here at Einstein Retirement Workshops, and we want to welcome you to this live question and answer session. What we do during these sessions is we take your questions from events that we didn't get to answer your particular question, and so we take those questions and we answer them in these live question and answer sessions that we have. And then we also will take additional questions. So maybe you've attended one of our workshops, maybe you haven't, but whatever the case may be, we certainly invite you to ask and chime in and give us some additional questions. But this will be a recorded event, and so it will be made available for, I guess, all time, technically. So in any case, we'll get started with questions now. If you do have a question, simply put it in the chat portion of either YouTube or Facebook, wherever you're streaming from, and we will answer your questions now. So Gregory Dufault asks, my wife and I are now retired with Social Security. The total is $39,444. A job that I have has an income of $8,900. We plan to move money from an IRA to a Roth IRA, but up to not paying taxes. Okay, so that'll be fine. You will have to be, so with 2021 exemption of $27,004, we can move up to $18,000 to a Roth. What are your thoughts? Okay, so the only issue you're going to run into is 18,000 plus 8,900 is 26,900, and then you have to add in 50% of the Social Security, so roughly another $20,000, which is going to cause some of the Social Security benefits to become taxable, which means that if you do a conversion of $18,000, you could create taxes, even though technically you're not being taxed yet, and you're filling up just that first standard deduction. The problem is you're going to add more taxable benefits, more taxes to your Social Security benefits. So I often talk about the Social Security tax torpedo, or that double taxation process. In your case, that would affect you. Okay, and the reason for that, again, is that when you look at taxable benefits, anything once you go over 32,000 of taxable benefits, or excuse me, of provisional income, you start adding taxes to Social Security. Provisional income is all of your taxable income, so a Roth conversion would include that, plus the $8,900 in question, and then you take 50% of the Social Security, and that's going to put you above that 32,000. Okay, Ruth Cunningham asks, when you do the conversion from an IRA to a Roth IRA, do the taxes come out of the IRA, or do you pay them out of pocket? Ruth, you can do it either way. So you can have taxes withheld from the conversion event itself, or you can convert the dollars and then simply pay the taxes at a later time. Portia Moffitt asks, is rental income included in the Social Security income? Well, okay, so I'm not exactly sure what you are trying to get at exactly, but if you're asking about if rental income is included in the earnings test, then the answer would be no, unless you are it's not passive income, meaning you're doing substantial amounts of work, and so you're required to take that income as earned income rather than passive income. Now, if what you're asking is does my rental income participate in the calculation for how much I will earn in my Social Security benefits, meaning am I paying FICA taxes on rental income? Again, that's going to go right back to that same question. Is this considered earned income or passive income? If it's passive income, it does not participate in Social Security. If it's earned income, then it does. Okay, Jacqueline Holt says, will my savings account be taxed when I deposit my required minimum distribution into it? So no, not your savings account, but the required minimum distribution will be taxed. I'm now depositing over $5,000 into my savings account. So that $5,000 gets added to your taxable income, Jacqueline. So whatever tax bracket you're in, that's what your tax will be. Now, if you happen to be causing additional Social Security benefits to be taxed, then you may need to double the tax exposure on that $5,000 to properly estimate your taxes. Okay, Daryl Prowse says, are required minimum distributions required for Roth accounts? The answer to that is no, Daryl. One of the benefits to a Roth IRA is that when you take distributions, there are no taxes due. So the IRS doesn't really care whether the money stays or comes out. Well, eventually they do. Once you pass, your heirs will have a required minimum distribution, but you do not have a required minimum distribution. Okay, Becky says, can one make a regular Roth contribution when contributing to a Roth 403B at work? Any limits there? Yes. So your maximum limit to contribute to any qualified plan, including Roth IRAs, is going to be $53,000, and it is partially based on your income. So 25% of your income or $53,000, whichever is less. Okay, Karen Kulas says, you mentioned that Medicare Part B would be more costly in retirement if your income is above a certain point. Please explain this further. So this is what is known as the Income-Related Monthly Adjustment Amount, IRMAA. If you were to Google that acronym, it would give you more details. The Medicare.gov website is the best one. Now, basically, it goes like this. If you are single and your income, adjusted gross income, modified adjusted gross income, is more than $88,000, you see an increase in your Medicare Part B premiums. And while I don't have them memorized, there are a few other thresholds above that that would cause those premiums to continue to increase. For married couples, it begins at $176,000 of modified adjusted gross income, and you would see those premiums increase. And again, there are higher tiers that will continue to increase those premiums. One of the things you need to be very conscious of is that when you are taking your required minimum distributions, just because you don't need that income, it's still added as taxable income. And so that taxable income could push your Social Security benefits into higher your Medicare premiums into higher amounts. Now, the first increase is $60 a month. Now, that would be each if you're married, or if you're single, just $60 a month. If you want to think about what that means, if you go above $176,000 of modified adjusted gross income, probably you are in the 22% tax bracket. An extra $120 multiplied by 12 months is effectively another 3% in taxes. So even though, let's say on $20,000, okay, so $20,000, the amount of increase in tax above that, so let's say you're at $199, that's $20,000 above the $176. The percentage in tax that your Medicare Part B premiums is acting like, it's not really a tax, it's just an increase to your Medicare premiums, but any increase to your cost is going to feel like a tax. And so it's roughly 3.5% on that particular scenario. I happen to know that because I had a scenario that came up recently and we calculated it. So it's going to vary depending on your particular income situation. The worst thing you want to do is go $1 above the limit, right? Because you increase your Medicare Part B premiums and you only went $1 above. So it's like $176 to $222 for a married couple. So if you're going to go above the $176, either because of a required minimum distribution, more likely because of a Roth conversion, then maybe you at least go all the way up to the $222 to minimize that relative tax increase. Okay, Jason Scott asks, can retirees convert funds from a traditional IRA and other 401k accounts into a Roth IRA. So traditional IRA to Roth IRA, yes. Technically, no on the 401k. Technically speaking, to do a Roth conversion, the 401k needs to go to the IRA, and then the IRA is converted to the Roth. I have seen people go direct from a 401 to a Roth. Technically, that's not allowed, although I haven't seen anybody be penalized for it. But if you want to do it exactly the correct way, you want to go from the 401, roll over to an IRA, convert the IRA to a Roth. Okay, Ed Sanchez says, I am near retirement and totally new to all this. When you say our IRA gets taxed, is that at the end of the year for federal income taxes, or is it the amount taxed that as we receive it? So great question, Ed. Yes, it's as the income comes out of the account. So any withdrawals you take from your IRA account will be added to your taxable income as ordinary income. 100% taxable, whatever tax bracket you're in, plus the increase there, and that will push your taxes up. Obviously, if you're dealing with Social Security benefits and you're not paying taxes on the full 85%, but you do have tax exposure, you need to be mindful of the Social Security tax torpedo that could be doubling your taxes on any additional distributions. Okay, Ed says, do Roth monies in a 401k have a RMD requirement? The answer, Ed, is no. No, they do not. But they are on a different timetable than a Roth IRA. Okay, Ann Stevens asks, my husband is 61 and on Social Security, I assume disability if he's 61. I'm 62 this year and will begin my benefit. Does his income reflect my benefit at all? Well, hard to say. I need to ask a few more questions, Ann, but probably not. The answer is probably not. Karen Scandariato. Okay, all right. You win for the tough name. What is the current maximum amount of Social Security benefits? How do I find out what my ex's benefit is? The maximum, technically there is a maximum for every single year, but it differs based upon your date of birth, what your quote-unquote maximum would be. The maximum would be attained by having 30 years where you maxed out on your, 35 years. So your highest 35 years, if you maxed out on 35 years of FICA taxes for Social Security specifically, then yes, you would have the maximum benefit. What is that amount? Hard to say exactly, for a new retiree this year with full retirement age benefits, it's probably around $3,900 roughly. Okay, so it does vary depending on the year you were born. Okay, Carol Hale says, Social Security website states a widow can remarry at 60 or older with no impact on benefits. Please confirm. I confirm. Kathy Hardman says, would rolling over a Roth IRA into an annuity, would that help in some way? Nope, it doesn't make any difference. So Roth IRA dollars, whether they're in an annuity or they're in an investment account or they're in a savings account or a checking account, there is no particular benefit for having a Roth IRA in any particular type of account. It's just that different types of accounts can hold different types of investments, and so you'd certainly and obviously want to have appropriate investments for a Roth IRA, because Roth IRAs, those are the dollars you want to be thinking long-term growth on generally. Okay, now if you only have Roth dollars, then you're probably going to be planning some income as well, but generally Roth IRA dollars, you need to have a longer-term focus because these are the dollars that you want to grow to use last, assuming, of course, that you're thinking that taxes could go up in the future, not down. Okay, came in late on the military benefits. Okay, but military benefits don't affect Social Security any longer. It's very old provision, and you'd have to have been born, I think in like 1949 or something like that, so I think you're okay. How will my benefits be affected? Probably not at all. Gina Rousseau asks, When you're on Social Security disability, at what point does it change automatically to just regular Social Security? At your full retirement age, Gina, you'll get a letter in the mail saying, okay, you're now on the retirement benefit. Judy Howarth asks, my husband, Hubs, all right, good. And I are both, all the different little nicknames, I don't know why they crack me up, but they do, are both retired military and drawing our retirements. Okay, great. Sounds like our taxes are already going to be high. Recommendations on filing for us. So, probably you want to get a lot of Roth conversions done before you would file Social Security. Just guessing, and this is just based on experience. I do have several folks that I work with similar to your short description there, Judy. So I would say that probably it's going to look really good to do a lot of Roth conversions and then file Social Security at a later date. But, without knowing all the specifics, I couldn't say for sure. Okay, Cindy Wilson asks, if I work into the new year, retire during the year, and then start Social Security, my working income for the entire year is held against me toward the earnings limit? Question mark. Sounds like people should retire at year's end. Where do I find my PIA on my Social Security account? My FRA is 66 and 10 months. Yeah, so a lot of times it does make sense to file benefits in January, okay? Now, unless you just want to maximize a benefit or you're retiring mid-year and need the immediate cash flow, it does often work out to delay till January of a particular year to file for benefits. And that's going to be primarily from a tax strategy perspective. So I think you're hearing that correctly. Where do you find your PIA? On the very front page of your Social Security statement, if you log into ssa.gov and you download a statement, the very front page in the upper right corner, that big bold number there, is your estimated primary insurance amount. Okay, looks like that's all the questions that we have. Appreciate everyone's attendance and attention. Thank you for the questions. We always appreciate those, and we look forward to answering them every time. We look forward to seeing you at one of our workshops, and we would encourage you to attend, and we'd love to see you there. We also look forward to seeing you at another Q&A event, and would be happy to answer questions whenever those are held, and we would love to see you there. With that, we'll wrap up our Q&A time together, and we look forward to seeing you again very soon.